The Capital Markets Authority continues to implement initiatives geared towards reforming the legal, operational and institutional framework in the capital markets to ensure it conforms to international best practice standards of securities markets regulation. The Capital Markets Authority has proposed the enactment of two new laws, the Capital Markets Authority Act and the Securities and Investments Act, which target compliance with international standards. The authority has in the interim strengthened its powers to recognize self-regulatory organizations, strengthened the legal framework for clearing and settlement of securities, and supported the introduction of regulated over-the-counter trading. One fundamental reform is the process of separation of the ownership and the management of the Nairobi Securities Exchange through demutualization.
This is an important process for this country because it's really part of a wider policy and regulatory reform that was started by the government through the parent ministry, the Deputy Prime Minister and Minister of Finance. And we believe it is very important for this country because it will instill greater corporate governance at the stock exchange. It will also instill greater competitiveness because the values will really be driven by profit that the shareholders will have to drive for the institution. So in terms of also making our capital markets industry world-class, demutualization, about 51% of the stock exchanges are demutualized. So we believe, again, having a demutualized stock exchange will also drive Kenya as a world-class destination for, for capital markets.
We are going to look at the NSE, the stock market, once again, with the aim of uplifting it to a standard that is internationally recognized. And to do that, we have to accept to do a few changes on the way they have been doing business in the past.
The Ministry of Finance and the Capital Markets Authority are determined to accelerate the implementation of reforms in the capital markets. I wish to reiterate that this process is for the benefit of all players and needs broad-based support in order to succeed. Demutualization is part of a broader legal, regulatory and institutional reform agenda designed to ensure that we benchmark ourselves with global best practices.
The reforms in the bond market are underpinned by benchmarking with global best practice and various studies that have underscored the need to enhance the legal and regulatory framework to support the development of the bond market in East Africa. A vibrant bond market will help the country mobilize long-term savings and capital needed to meet the aspirations of transforming Kenya into a middle-income country as projected in the Vision 2030 economic blueprint.
A dynamic and robust bond market is key to our ability to realizing the overarching national goal of Vision 2030, that is to transform our country into a middle-income status by year 2030.
The reforms will no doubt broaden and deepen our capital markets by increasing competitiveness, encouraging market-driven development of the new financial products, enhance the governance structures, and bolster investor confidence.
The bond market has witnessed increased liquidity and higher turnovers due to automation of trading and settlement, lengthening of the government bonds maturity to 30 years, and the stable yield curve due to the issuance of benchmark bonds, among other reforms.
The bond agenda has been there for a long time. I think the concern has been that, yes, our equity market has thrived and there needed to be interventions to, again, ensure that our bond market gets to the same level as our equity market or even surpasses it, as we've seen in other countries where the bond markets are thriving.
The proposed changes to the legal and regulatory framework are anchored on the Vision 2030 economic blueprint, where the capital market is expected to play a pivotal role in mobilizing long-term resources to support productive economic activities.
From 2008, we did receive a consultancy from the Ministry of Finance as well as from the World Bank to look at our entire legal framework. And what we believe it will be really a cutting-edge legal framework that will take us to the next level of regulatory reform, as well as really focusing on us being a world-class regulator, which is really what our vision is.
Capital markets plays a crucial role in facilitating growth and development of our economy. Efforts, therefore, to improve the capital market regulatory regime and to encourage wider participation by stakeholders is indeed most welcome. I would like to commend the Capital Markets Authority for spearheading this initiative and confirm the strong support of the Treasury in the implementation process of this reform agenda.
We will be working closely with various state corporations, with the government, family-owned businesses, to encourage them to raise funds for long-term investment through issuing corporate bonds and selling shares to support growth plans.
The changes are expected to ensure that the legal and regulatory framework in Kenya conforms to the principles of effective securities regulation of the International Organization of Securities Commissions, IOSCO, which brings the authority in line with best practice. The objectives of the International Organization of Securities Commissions are to promote high standards of regulation, promote the development of domestic markets, support efforts to establish standards and an effective surveillance of international securities transactions, and provides mutual assistance in support of integrity of the market through a rigorous application of the standards and by effective enforcement against offenses. The Capital Markets Authority is a member of the Africa and Middle East Regional Committee of the International Organization of Securities Commissions. Member states meet regularly to discuss cross-cutting capital markets issues and strategies on the way forward. The Capital Markets Authority has adopted risk-based supervision, which is a modern approach to supervision that places emphasis on understanding the risks and assessing the adequacy of each market intermediary's risk management systems.
Our supervision has increased and the supervision methodology has also changed. We are using more technology and also more work is done prior to us going for the actual physical inspection of the intermediaries. More prior focused work is done at the authority so that the inspection is actually very focused and can produce the necessary results.
All licensees have appointed compliance officers responsible for identifying potential risks and ensuring measures are put in place to mitigate the risks in consultation and coordination with the authority. The Capital Markets Authority has appointed relationship managers for specific firms to monitor compliance with capital markets regulations. The Capital Markets Authority is committed to promoting integration within the East African Community member states under the umbrella of the East African Securities Regulatory Authorities, EASRA. The members are Tanzania, Uganda, Kenya, Rwanda and Burundi. EASRA is a key contributor to policy determination at the EAC through the Capital Markets, Insurance and Pensions Committee. Members of the East African Securities Regulatory Authorities meet regularly to deliberate and make decisions on a number of capital markets regulations and development issues within the region.
It is important and we really support the initiatives of the Capital Markets Authority. We are really charged with driving the reform agenda to ensure that our capital markets are really driven to world-class standards so that again we can attract the necessary foreign direct investment to bolster our country at the same time.
The ongoing legal, regulatory and institutional reforms are expected to increase competitiveness, encouraging market-driven development of new financial products, enhance governance structures, bolster investor confidence, and ultimately encourage increased domestic and international capital flows into the Kenyan economy. The Capital Markets Authority, promoting capital markets integrity.